But then one night I was in LA with one of my clients, and he's a multi-billionaire. And we sat at dinner and almost choking, like as if it didn't mean anything to him. His lawyer was like, hey, why don't we just give Felix like $10 million to start with? I'm like, oh shit. There is the types of people out there that can say, let's give this guy 10 million to start with. Like it meant nothing.
Felix Hartmann, welcome to the podcast. How's it going today?
Hey, so glad to be on here today with you.
Pleasure to have you here. So we always start the podcast with kind of you introducing yourself, tell people who you are, what you do, and a bit of background about yourself.
Yeah, for sure. So my name is Felix Hartmann. Since this is a trading podcast, I've been a trader since 2012 now. So we're going on to 7 years, I believe, if my math is right. Yep, 7 years. I was born and raised in Germany originally, but moved to the US back in 2008. So got a little bit of an immigrant going on here. And yeah, it was interesting because I actually moved to the US in 2008, which was the year when the economy collapsed. So I feel like ever since I moved to America, like the economy like kind of like on the forefront, of like how I grew up. And I had some really interesting experiences seeing that unfold there. So I got started at the right time, which was in the recovery process.
Nice. Awesome. And people probably want to know, what was your start for you in trading? What is your story of like beginning to becoming a profitable trader? Was that tough? Was that simple? Or how was it exactly?
Of course it was tough. First of all, I think that if you ever heard of the 10,000 hour rule, the thing that kept me with trading for long enough to become profitable is the fact that I read enough statistics that said that something along the lines that the average trader blows up their account in the first 6 months, but it also takes the average trader 2 years to become profitable. So that made me realize this is why most people don't become profitable, because they blow up their accounts first. And on the same token, I looked at, the Forbes 400 list, and I saw that there's so many people that have made fortunes in finance. So I knew that it was possible. I just had to stick with it long enough to figure out how. And that's exactly what I did. I put in those hours literally consuming any books I could, like for example, Jack's books that you had on the podcast, Jack Schwager. He has fantastic books with market wizards. Any courses I could get my hands on online, just putting in the hours on the charts. Sometimes while sitting in class and just making every single hour count. And I'm pretty sure I should be at the 10,000 hour mark already, if not very close, just because over the 7 years, if I put in at least 6 hours a day, that adds up.
Mm-hmm. Yeah, totally right. But I think one of the things that people can struggle with sometimes is that they can read books and they can even like read a different blog or watch a lot of videos, but they don't really practice what they learn. So how is it for you to kind of practice and apply what you learn?
Yeah, no, absolutely. Nothing comes close to the practice. And this is really funny because sometimes I have students and I'll teach them everything I've learned. And then they'll think they're like at the same level, or sometimes people read a book on stocks or trading and they think they know all the same stuff. But there's a lot of things that you cannot just learn from books. And like I would say, books are here, courses are there, but then like the real experience, that's the hardest knowledge and experience to earn, because now I'm at this point where I can look at a chart and not only do I see a pattern, but much more, my memory starts kicking in. I'm like, wait a second, I've seen a chart like this before. Maybe I've seen a chart like this 5 times before. Chart patterns, we're talking about volume, we're talking about, the speed of change. And like, there's so many different things that you simply can't all memorize in books. But if you've been looking at charts, if you've been trading for this long, you start stacking up this frame of this reference book, so to say, in your mind.
Yeah, totally agree with that. What was the reason for you to go into cryptos? Was that the first thing you went into trading like from the beginning, or did you kind of move into that over time?
No, so I started with stocks initially. I started in 2012. I think the first year I spent mostly virtual trading, fake money. And then really after I had some great success, I think I was up like 77% in 3 months. I was like, you know what, maybe I should take this more serious. So I sent my first like $950 of like money I earned on minimum wage into my trading account and start from there. Because of course with $950, stocks didn't move very slowly. I shifted over into options. So I had my, experience with leverage there. And then it wasn't until 2017 that I went full-time into crypto so basically I traded stocks and options from 2012 till 2016. I took a 1-year hiatus where I was a full-time CEO of a company. and then went back to trading full-time 2017 until now.
Nice. So I'm curious to know about that a little bit more. What is it like to manage different things? So like having a company and trading, is it difficult? Is it simple? Do you find it easy?
Of course. So this is exactly why I took the hiatus, because I tried doing everything at the same time. But it just takes your focus away. So at the time, I was CEO of a startup, and the stock market, of course, opened from like 9:30 till 4 Eastern time. So they would literally clash. I would sit in the office and like with one eye, I'm looking at charts, but then really I'm not getting shit done until 4 p.m. So I was like, you know what? I have to make a choice here. And my realization was, you know what? The stock market will always be there, but I have a great opportunity with a startup now. We were seed funded, so we had investors. We had everything was going well. So I figured at the time, you know what? Let me just go all in on this now. I can always go back to trading, and which I ended up doing. And it actually was the startup that got me into crypto, because we were, I think, the first crowdfunding platform that allowed integrations with crypto. So we had integrations with Coinbase, with BitPay. And because of that, I kept seeing the prices. So I saw like an ETH at maybe, $4. And then I saw like 2 months later, it was at $30. I was like, wait a second. It was basically when our startup was facing a lot of internal conflicts between co-founders and the crypto market was taking off. I was saying, you know what, I'm getting out of here. I'm going all in on crypto, which was a fantastic decision, because even at the current low prices that crypto is, they're still really high compared to where I started.
But then was it tough to adapt to cryptos, or was it the same thing exactly as stocks?
Yeah, it was, honestly, it was perfect, because it had the same like volatility that I'm used to from options. Options, the prices, they go really fast because they're leveraged. But so the beauty of it was I had the volatility of options without all the complicated, option creeks, and without the time decay. With options, yes, you have a lot of volatility, but if you wait too long and your trade doesn't turn on your way, you still lose money because of the time decay. Now with crypto, it's like I can go long on a stock where I can never lose more than I have. I can never blow up my account unless they go to zero, which I doubt they will. But at the same time, I have those crazy moves where I can see a symbol go up 10%, 20% in a single day.
Yeah, that's, I think, why a lot of people later got to cryptos, and especially Bitcoin later on. And so you probably had to do a big job of like adapting to the market, because it went really fast to the upside and then more to the downside. How did you adapt to these changes recently?
Because they move so fast, I was always day trading them. As a day trader, the way I really saw it, especially in 2017, is that you can almost treat the crypto 5-minute chart, or maybe the crypto 15-minute chart, like you would treat a stock day chart. Meaning in 15 minutes, a crypto might move as much as a stock does in a full day. So hence, really, you might apply the same tactics that you would apply as a swing trader in stocks to being a day trader in crypto. The reason I could never really get around much to being a swing trader in crypto is because they move so much where you would have to accept an enormous amount of risk, meaning, the smart place to put your stop is like 15% down. And I just would never accept that. My max risk generally is no more on now with the fund. My max risk is, I think, 25 basis points. For me personally, I did like 1%, maybe 2% max risk. But you can't find that on a swing trading chart. It's
Definitely. And then you went on to create a fund with that, a hedge fund where you trade for that fund. How was that decision like? Was it that clear for you that you wanted to do this in the past, doing this now? Or did you have to kind of go through that progressively?
No, it's funny. The idea was more or less sparked in one night. First of all, I did have a lot of success trading in 2017, of course. And so people used to tell me, hey, why don't I give you my money and you'll trade for me? Mm-hmm. And I was like, I can't do it because like I didn't want the legal risks and all that kind of stuff. But then it all changed when, people used to tell me, hey, I'll give you $10,000. But then one night I was in LA with one of my clients, and he's a multi-billionaire. And we sat at dinner, and almost choking, like as if it didn't mean anything to him, his lawyer was like, hey, why don't we just give Felix like $10 million to start with? I'm like, oh shit. There is the types of people out there that can say, let's give this guy 10 million to start with. Like it meant nothing. And that really had created a paradigm shift in my mind where I was like, holy shit, there are billionaires out there, and there's a very thin market of people like me that have mastered these markets, that understand these markets, and there's a real opportunity here. So in that same month, maybe a week later, 2 weeks later, I looked up all the leading crypto fund attorneys, and I made the first payment to set up my crypto hedge fund, because I knew, like, if I met one person like this, I will meet more. And I knew I still had an early move advantage. So I set that all up, and I realized it's a lot simpler to set up a hedge fund than you think. It's just really expensive. So like, you know, because initially I thought, oh, well, I need all these licenses, I need all these like different things, but anything can be bought, right? So like the only thing you can't buy is experience. So I had that. I had the hard part of like having the experience. I had the hard part of having people that want to give me money. Everything else, like, you know, finding an attorney, finding administrators, finding auditors, setting up bank accounts, that you can pay for that. So what used to hold me back turned out to be a lot simpler. It's just a question of time and money. One of those things where you make a decision and there's no going back. You know, I had that dinner. I was like, you know what? I got to start this fund. I want to show these guys that like I'm making moves that like I can actually accept a check about if they were ready. And it turned into a reality so fast where one guy offered me money, the next week another guy offered me money, and all of a sudden the dialogue changed from me saying, sorry, I don't want to take your money, I can't take it, to, oh yeah, that's great, I'm actually setting up a fund. And all of a sudden the numbers started adding up. And it really created a shift. And it was really just a question of, you know, once I made the decision, there was no going back. And especially once I made the first attorney payments, I mean, attorney payments, they start in the 5 figures. So, you know, once I put that money down, I was like, I'm committed to this now. We'll go with it. And I think what really pushed me to go fast at this was that in January and February of 2018 is when the crypto market first really tanked. You know, we saw Bitcoin literally go from 20,000 to 6,000. So I was in a rush because I thought we're going back up really, really soon. So I was like, I got to get this fund out so that I can take advantage of these low prices. Well, it turns out they stayed low for a little bit longer, but that's the second part of the story.
Yeah, totally. But I really like that aspect of like you making the payment first, and that kind of puts you there to being obliged to execute on that after that, which is awesome. That's a good thing. Mm-hmm. And then for people starting out that really have kind of no connection, that want to start a fund, how do you recommend them to kind of meet the people that would be willing to invest in a fund?
Well, first of all, I would say you will know when the time is right to start a fund, in the sense that if that is a problem you have, it's probably not time to start a fund. Even for me, and I'll say this, you know, I had probably a list of like 100 hot leads, you know, and all of them gave me like verbal confirmations. Well, like, yes, I'll give you money. It's ready whenever. And like, I'm just waiting for you. And maybe 80% didn't close initially, you know? So you really have to, I would say whatever number of money you think you're able to raise, multiply that by 0.1 or 0.2 or 0.3, because a lot of people act like they have money, but they don't. You know, they will promise money that they don't have, or something comes up. So really, I think, again, you will know when the right time, because you should have all the things in place, meaning you should have the experience. You should have the track record where you're able to execute. That's the most important part. If you can't execute, you're not ready. Part 2, your track record should be so established that people know about it, that people literally come to you, that people talk about you, that people recommend you, you know? Again, I never wanted to start a fund. I really started the fund out of the fact that I had so many people say like, hey, can I just give you my money? Because they know how well I did. And then 3 really is just like, you know, having that network, actually knowing enough wealthy people. And this is the biggest challenge I still face, and it's something I'm working on, is that if you want to be in this finance game, you have to be friends you have to have lots and lots of friends that either make 7, 8, 9 or more, you know, figures, which the average person just doesn't have. You know, your friends won't cut it because they have to be accredited investors, meaning you won't even be able to get in the door unless you have a net worth of $1 million or more, or have been making $250K for 2 or 3 years. Yeah. So that really makes the pool smaller. So I would just say, if you don't have those things yet, and you think about, hey, in the future, it's my goal to run a fund, keep honing your skills, become a better and better trader. Talk about it, share your results that will attract some people, and always be networking, always make friends. And just, again, don't think about just closing them right now. Maybe you are 20 years old and you think, I want to start a fund in the future. Don't even ask them for money. Just tell them you're trading. And then if maybe 2 years, 3 years down the road and they realize, wait, you're still trading? You didn't just blow up your accounts like everybody else did after 6 months? There might be something to this kid, So I would just play the long game.
Yeah, great lessons. And even for me, the biggest breakthroughs I had were not based on like strategies or things I worked on, but based on like relationship of other people I know that taught me something or helped me do something, which is exactly what you're pointing out, which I kind of like. It's awesome. Now you probably have a lot of people reaching out to you and you see them making big mistakes. What are the top like 2 or 3 mistakes people make all the time, in your opinion? Apart from like blowing an account early, let's say.
Well, blowing up the account is not the mistake. It's what led them to blowing up the account.
Yeah.
So something that I see all the time, and especially with my students, where I urge them not to do it. I literally, I warn them all the time and they still go for it, is number one, overusing leverage. Okay. So, and this is a two-part, there's two mistakes. So the first part is overusing leverage. So in crypto, we have this platform called BitMEX, and essentially allows you to use 100x leverage on crypto, which I think is insane. Because I've seen so many people blow up their accounts just simply. Because if you think about it, if a crypto just has to move 1% and you're blown up in at 100%, at 100x leverage. And sometimes that happens in 10 minutes, in 5 minutes. So you're really gambling at this point, right? And I've seen all kinds of stories. He did a cruise account, I think from $4,000 to $30,000 without any leverage, just using my techniques. But then he got a little greedy and he started using margin, and then he blew it up to zero. And then he threw in another couple of $1,000. He blew it up to zero again. Why? Because he started using margin. Because all of a sudden, your downside just becomes so extended. And this happens on the small scale and on the big scale. It was actually maybe a month ago, and it was in December. I was at a Hollywood Hills party, and I met this guy who his friends introduced me that he made like over $10 million during the crypto bull run. But then he also lost almost everything in 2018 because he used leverage. He used extreme amounts of leverage on BitMEX. So I guess, one of the questions you sometimes ask is, what quote I live by, right? And for me, that is really like, stunts may win battles, but consistency always wins the war. Okay. So, and this applies to any part of life, not just trading, but like people always go for the stunts. Like, what if I go like 10 times margin or 50 times margin on Ripple, and if it just goes up 10%, man, all the money I'll make. But then the second or third trade doesn't work out in their favor and they go to zero. This is really something I can be proud of. Like in those 7 years, I have never once blown up an account to zero. Why? Because I don't use leverage. That's simple. And I know I say this as an options trader, but even as an options trader, you can limit your position size. So, mistake number one people make is they just totally abuse leverage. They don't understand how to use leverage, which leads to the mistake number two is that they just do not properly use risk management. And when I say risk management, every single one of your trades should have a stop. This is one of the mistakes I've made in 2018. When you fall too much in love with a stock or crypto or whatever, and you say the words, well, how much lower can it go?
Yeah.
When you say those words of how much low can it go, it can probably go down a lot more. And those are the times when you really need to stop, right? So simple mistake I made, for example, Ethereum hitting $400, there was a huge support. It wouldn't go lower. It would bounce right off. Maybe a month ago, it was trading like $80. So yes, it can go lower, even if you think it can. I know it was at 1,400, but so I'd say that the three mistakes is one, overusing leverage. Number two, not using risk management. Which is you should always have a stop. Always, always, always. I literally have rules like in my trading desk now where I punish myself if I don't set a stop. Like, I don't know, like cut an inch off your hair or like, have to do something you don't like, I still have long hair, so I have been putting my stops in. And number three, falling too much in love with an asset. Falling in love with an asset is maybe okay if you're a long-term fundamental investor. but it's not okay if you're a trader. You really got to be like emotionally dead towards what you're trading, because all you trade, you're not trading the symbol, you're trading the other people that are trading the symbol. You're trading the market.
And when you talk about consistency, I think that applies a lot to trading, but also outside trading. So are there any habits you have that help you become a better trader, or help you stay like at the top-notch level in trading?
Many things. Something I've been doing lately, especially when we're facing a bear market, like we have been in the crypto markets. Basically, as soon as a position is profitable, I move my stop into the profit zone. So that way I have almost little to no losers, and I create many, many small winners. Of course, always adjust to what the market offers you. And I think I honestly like the biggest part to becoming, to thrive as a trader in that sense would be to become a lot more not emotionally stable. That sounds too low of a standard, but more become almost like Zen, right? I don't trade when I'm upset. I don't and upset could be because of life situation. Let's say a girl breaks up with you, don't trade. If you have a bad trade, stop trading. Learn how to take breaks. Like you always only want to go to the trading desk when you're in a really strong psychological position where you're neither upset nor are you overconfident, because both of those are profit killers. And I think one of the simple questions I like to ask myself, and that I keep always around, is would a pro do this? And I think that's what a lot of beginning players must ask, traders must ask themselves, because many times we do all this little bullshit where we go all in, maybe with leverage on like some stock pick that a friend gave you, but then ask, would a pro do this? Hell no. Like imagine you were actually running a hedge fund. Imagine you were managing other people's money. Could you afford taking that trade? The answer is 90% of the time, no. Yeah. Well, would a hedge, would a fund manager maybe put a stop? Well, yeah, definitely. They could not afford telling their investors, sorry, we just lost everything, or sorry, we used so much leverage, we blew up our accounts. No. So I love to ask the question always, would a pro do this? And it just takes some self-honesty and self-awareness.
That's a really good point, definitely. And so you mentioned about becoming in the right emotional state to be able to trade. So yes. How do you do this on a daily basis? Do you have time where you don't feel like trading and then you put yourself in a different mindset by doing something before that?
I journal almost every single day. So that's just like emptying out your mind, putting stuff on the page, just being very clear, which allows you, journaling might sound very, beta, lame kind of thing. But in reality, it really makes you extremely strong psychologically. It makes you more self-aware. It makes you catch your little internal dialogues much faster. So that's huge. Also, simple stuff like keeping healthy fitness. I go to the gym 6 times a week. So always just like staying energized, staying level-headed. So simple routines like journaling, going to the gym, maybe meditation. Just you always want to be in a peak state. Like whatever can put you in a peak state, whatever that means for you, that's key. And then I have simple rules. Like for example, I will take 30-minute forced breaks after every trade, because what we tend to do is we have a good winning trade, and then we see it tick down a little bit, and we're like, oh, on to the next. And then of course it ticks down more and you lose. Yeah. So I just force myself to have that. It's like, I literally put it that way. Like trading for me is like stepping into like a gladiator arena, right? The mistake beginners make is that they think they have to stay in this arena the whole time, to fucking fight until they die. Make my fight, I'm winning, I go out, I rest, I recover, I get ready for the next fight. I'm looking for the right opportunity, I'm looking for the right opponent that I know I can win against. So it's really like treat yourself more like you're waiting for the opportunity than you're just like jumping in the water, like hoping that you catch a fish,
Yeah, that's a really good trick, and it's just supposed to apply, but people not applying it, that could be awesome. That's a
yeah. Thing. No, and something I've really learned over these 7 years is that there will always be opportunity. I know it's so easy. It's so easy, even now, to still get caught by the fear of missing out, right? Because we think, whoa, well, what if this is the last time it bottoms? What if it goes up now? That's fine. It will still, something will still go up tomorrow. Something will still go up next year or in 10 years. Like it's markets. There will always be one industry. There will always be an asset class that's going up. So just have that patience, be willing to walk away from a winner, in the sense, what I mean by that is that when you come too late to the party, like sometimes, for example, maybe I've been stalking a breakout and then I miss it. and it's already up 5%. It's already getting close to my target, where inside of me is like, damn, you were right. Just get in now. But then I know, no, my risk reward ratio is just like lopsided, right? Now it's like I'm risking 5%. I'm standing to make 1. There's no point. You missed it. There will be another one. It's like fight to live another day.
Yeah, exactly. Awesome. Did you have any bad trade yourself, or what would be like a really bad experience for you, and how did you overcome it after?
So usually I have this go-to story that I almost always tell, but I think I'll add another one this time. So my first bad trade, my first really bad trade that really shifted things over for me big time was, I think, in 2014. Yeah, it was 2014. Basically, I was partying. Like back then, because I was still starting day trader, so I had less than 25K in my account, and because of that, there's the pattern day trading rule, meaning you can only day trade 3 times a week. So what I would do is I would always wait till Friday. Friday is the day when weekly options expire, meaning there's a crazy amount of arbitrage to do. So I would always wait till Friday to do my day trading, and I would make a lot of money back then already for the small amount I was trading. So Thursday night I was out partying. Friday morning I wake up, I'm like, oh shit, like I'm not really feeling it, but you got to trade. This is the one day of the week where you work, and literally like I was living from it at the time, which was awesome. But I still forced myself, to make those trades. And the first one I remember, like I was on all kinds of substances, and like the first one I was down like $800. I'm like, oh shit, that just happened. All right. I was like, okay, I got to fix this. So I went back at it, and I like, fuck, I'm down like another $250. I'm like, all right, I got one more left. We'll make this count. And I ended the day at like minus 1,207 or something like that. I like the number really stuck with me. But the bottom line is like, at the time, that was a huge chunk. Of my account where I was like, holy fuck, how did that happen? And the bottom line is that, one, I was in a horrible mental state. I was like, you know what, knowing when not to trade. I was still a little hungover. So I was like, you know what, you shouldn't have traded. Number 2, obviously didn't use any type of risk management. I was just like, going at it. And the worst part, and this is what most beginners fall for, is revenge trading. Remember and the thing is, the 1,200 I lost happened in like an hour and 11 minutes, I believe, or an hour and 10 minutes, a small time frame. If you remember my earlier rule where I said, if I have a winning or losing trade, I will force myself to take 30-minute breaks.
Yeah. That
event would never have happened, right? But because I was like going back in, it's like jumping from one to the next, that kind of screws you over. And revenge trading is, I think, the number one, that's just the end of it. Because then people, they act so emotional, forget about being zen. You're literally just like, trying to fix shit. So that doesn't work. So that was the common story I go with, because like that really shifted things for me, where after that, I was like, I kind of started making serious trading plans. I was like, how can I prevent stuff like this? How can I set up rules that would prevent me from making those type of losses and horrible decisions? So that's when I first got extremely serious. I started treating it like a business. I started using a trading plan. And I believe after that, actually, that's when I became profitable consistently. The second big mistake was this year, actually. And this goes back to something I said earlier, which is you can't fall in love with what you're trading, right? So I will say that I have been outperforming the market for the past 2 years, but I could have done a lot better, in a sense that in 2018, the more I became familiar with crypto, the more I fell in love with like the underlying technology, with its potential, its capabilities. And that just started shifting my outlook more and more bullish, right? So like the charts could look horrible, but then my mind said, oh, well, it's got all this potential. It is going to go up there, which I think it will. But as a trader, you got to stay like kind of like emotionally dead towards whatever you're trading, right? You cannot fall in love with it. And the thing as a trader is like, it's either going up or it's going down. Why does it not matter? So again, I outperformed the market. We did well. We did well given what the market gave us, meaning the market fell 90%, 95%. But it could have been a crazy winning year if I would have stuck true to my, trading paradigms and trading beliefs. Which I think anybody needs to. And I think this is where most traders fall at one point. I do remember, because I know you had Tim on your show, and I remember reading his book where he talked about a similar thing. He he was investing in like a friend's company, and like he believed in it and he tried to save it, and that's what ended up ruining his hedge fund, right? So you cannot fall in love with what you're trading.
Yeah. And one thing I love from what you said is that you really adapted over time. So like you had a tough time, then you put a new rule to adapt to it and to fix it next time, which is, I think, where a lot of people fall short too. They might have a tough time, but then they just like complain and they don't adapt after that. So
yeah. And something really to recognize here is, Einstein says that, what is the quote, insanity quote? Insanity is like trying to do the same thing that doesn't work over and over again. Right. So I've seen this happen again with some students where maybe they blew up their account because of leverage. And what do they do to fix it? Let's use even more leverage to earn. For example, my trading plan, I do give myself sample sizes where I will say, I will apply this trading plan for at least 20 trades. And then I will look back and see how did it perform. Right. You got to give it some sample size because maybe the first one is a loser, maybe the first one is a big winner. Doesn't matter. But like on average, how does it perform? And then if it doesn't perform well, you gotta adjust. So it's always like it's a very self-reflective, it's a very analytical job, so to say, where your review is probably one of the most important aspects of it. Like I journal every single trade, and I will review every single trade. Like something I sometimes do is print out the charts and literally plot where did I enter, where did I set my stop, at what minute did I up my stop, and so on, so I can kind of like relive the trade. And then in hindsight say, okay, where could I've performed better? Like how could I've maybe made this a bigger winner? Or how could I've kept this from being, like how could I've made this a smaller loser? How could I've been in their shorter time frames? Because time is money too, So just like always be optimizing. I think if you don't know where your last 10 trades were, that's the number one reason why you're not winning. You got to have a clean journal. You got to know not only which trades you took, but also why you took them.
Yeah, that also made a big difference to me in the past, to print all the trades and identify everything on paper. Somehow it's like different. It's like you look at things differently on paper than on the screen, which is awesome.
It goes back, quantum physics in the sense that like you perform differently when you're observed versus when you're not observed. And that is honestly part of the reason why I still coach. I wouldn't need to coach anymore. But I've observed all the way back from 2015 when I had my first students to now. When I have students, I perform better. It's really weird. And I think the reason is because I feel like I have people looking up to me. I have people like seeing me as like I need to walk the talk. I need to live what I need to like actually practice what I preach. So I noticed this when, I had students, I was like, and maybe I felt like taking a really dumb trade. I was like, no. These kids are watching me. They're learning from me. Like, I don't want to set a bad precedent. Right. So, and you can re-engineer that, whether you have students or whether you just like post your trades on Twitter or stock tweets or wherever you post them, just hold yourself accountable, force yourself to put yourself out there, because then you will think twice, like, do I really want to post a trade there? Because like, there's a good chance it's not going to work out and I'll be embarrassed. Right. So, I would say accountability helps a lot.
Yeah. It's awesome. How can people find you if they want to connect with you or reach out after this podcast or this interview?
So the most active place where I'm at is Instagram. So that's at Felix_Hartmann. I'm also going to starting to post more stuff on YouTube. You can just like search my name there, Felix Hartmann. And last but not least, I am setting up a new website where I'll be, starting to share probably some free resources. I'm starting a blog, where basically what I'm starting to do now is shifting more, like, because trading is not, because the hedge fund is really my full-time focus. Trying to create more content around it, meaning more documenting, like what are my insights for the day? What are some lessons I learned from maybe today's trades? Just very simple stuff. Like I really just do it for myself and maybe the people that care. But I think it's definitely worth checking that out because that's going to be launching soon. So felixhartmann.com.
That's awesome. And I was going to ask you, what are some goals you have for the future as a trader?
As a trader, my goal is to hopefully this year, I would say that at least I think in the next 3 years, my goal is to turn my fund into one of the 5 biggest crypto asset management firms in the space, because we are an early mover. A lot of funds are shutting down because they didn't do well in 2018. We're still around. We raised more money. We're doing well. So growing that, kind of becoming the Ray Dalio of crypto in a way. I do have a lot of respect for Ray. I've met him in person once and said some very kind of words. So he was an early inspiration for me. But as a trader, just growing the crypto asset management firm. And beyond that, I really do see myself in various different angles. And this, I guess, where the comparison to Ray comes in, I will likely have different funds under the Hartmann Capital brand. So maybe like an emerging tech fund is something that would be very close to my heart, perhaps more in the VC space though, than as a hedge fund, because I do see myself a lot in the futuristic space, whether it's crypto, AI, AR, VR, just anything that's future. Because I do see like, I'm pretty good at like, projecting what's coming, especially since I'm a dystopian fiction author and I spend most of my day thinking about the future. So just like being able to merge those two, my passion about the future and investing and trading.
Nice. What's your main motivation for all that?
So my motivation really, and this goes back to my bigger vision, is I think that the world is heading in a very dangerous direction with the way technologies are progressing, where a few big tech companies have crazy amounts of power over the world. So what I want to do is really like be a leading voice in that space, in both the tech, but kind of in the tech space, and guide things the right direction. And I think one of the most powerful ways to accomplish that is becoming a large investor, like, fund manager, where I can make, like, where I can allocate resources in the right companies, in the right hands, in the right teams, and really kind of move the direction of the market to make sure the right voices are empowered. So I think the future can be either thriving or rather depressing, can be a utopia or dystopia. So I want to be the force that pushes us into a thriving future towards a utopia. And I think it's a possibility.
Cool. So Felix, I have one question I ask all my guests on the podcast, which is, if you could give people only one piece of advice on how they can thrive as traders, what would that one piece of advice be?
One piece of advice as a trader. If it would be one piece of advice, just one. There were so many things I said today. I think it goes back to, you have to know who you are as a person. And what that means is you have to know whether or not you're even meant to be a trader. I know the money aspect can be very intriguing, but for example, if you're a too emotional person, trading might not be for you. And that also means that even if you're cut out to be a trader, you have to keep working on yourself, right? I think you becoming a better trader happens a lot outside the trading desk, meaning your psychology is what dictates 80% of your winners, right? Like you following out and selling too soon, or you taking too much risk, like all goes back to what's going on up here. So if you want to really take it to the next level, you have to be more self-aware. You should definitely start journaling your real life, and you should start journaling every single trade and just turn it into a science, much rather than just hoping that the next one will be a winner.
It's powerful, powerful. So Felix Hartmann, thanks so much for being here today. It's been a pleasure to have you on the podcast.
Thank you so much. It was awesome. Thank you so much.